Ladies and gentlemen, on the other side, we've got our next conversation brewing in. May I please request our esteemed audience members to now be seated and get geared up as we talk about serving cash-dependent populations in a digital world. On that note, as the conversations keep brewing in our room, allow me an opportunity to now invite our moderator of this conversation. Let's give it up for the editor Reuters, Ms. Ira Dugal. Ladies and gentlemen, let's give it a big round of applause as we welcome Ms. Ira. Thank you so much. Also, I'd like to take the opportunity of inviting Mr. Fraser Mdwazika, the Director, Payments of Reserve Bank of Malawi. Thank you, Mr. Fraser, for joining us today. May I now invite Mr. John Clement, Advisor Payment Systems, European Central Bank. Thank you, Mr. Clement. I'd now like to take the opportunity of inviting Kenneth, Chief Fintech Officer, Monetary Authority of Singapore. And if I may now invite Mr. Shergeran Naidoo, Head of Stakeholder Engagements, Pay. Thank you so much. With that, may I request our panelists to please be seated, and over to you, Ms. Ira, to take it forward.
Thank you so much. Thank you so much. We'll maybe give it a second for everyone to take a breath after the last panel and settle down so we can begin for the next panel. May I request people to please take their seats? Okay, I guess I can sort of kick it off, and then people will settle in, and we can get rolling. Thank you all so much for joining us here this afternoon, this early evening, as we talk about various aspects of fintech, of payments, of cash. And our topic today is one which continues to be endlessly fascinating because with every few years, the direction of conversation changes, but the one thing that does not go away is cash. I'll give you India's example very briefly, and we have had enormous amount of innovation in digital payments. And I was looking at the latest Reserve Bank of India study on usage of cash in the economy. The currency in circulation to GDP ratio is off its peaks from the COVID period, of course, but it is not very different from what the trend was. It is still at about 11.2%, which tells you that even in an economy where digital payment options have mushroomed, there is very much still a need for cash, in some cases a preference for cash. Yes, the use of cash in transactions has come down significantly, as we know, from withdrawals at ATMs, and that percentage has come off quite significantly. But currency is very much, if not king, it's certainly not the pauper, if you could sort of put it that way. So we're bringing in various aspects of the experience with cash in geographies ranging from Europe to Singapore to Africa as part of this panel discussion. Let me welcome our panelists. Jean Clement is Advisor Payment Systems at the European Central Bank. Thank you and welcome to Mumbai. We have Kenneth, Chief Fintech Officer from the Monetary Authority of Singapore, who everyone looks up to for some of their leadership in digital payments. So welcome, Kenneth. We have Fraser here from, I'm sorry, I'm going to mess up your last name, so I'm going to stick to Fraser. from the Reserve Bank of Malawi. He's the Director of Payments there as well, and we are very eager to hear what you're seeing in your geography. And Sheikhs Naidoo, I'm taking the liberty of calling you Sheikhs to avoid messing your name, is Head of Stakeholder Engagement at Paying, has deep insight into what's happening in South Africa. Thank you all so much for joining us here, and thanks again to the audience. I'm going to sort of start with the broadest of questions, but I'll come to you, Jean, first. A few years back, if I was moderating one of these panels, I think there would be a fair amount of optimism that, the use of cash will continue to go down, and the direction of conversation was all about improving the access to digital payment options. It's interesting to see that where you're coming from, you felt the need to have a document out there which is reiterating your commitment to cash alongside digital payments. I want to talk and hear from you first on the role of cash in an increasingly digital world in your part of the world.
Thank you, everybody. Indeed, so that's a very interesting curve to follow, because we see indeed the decline of cash. So it may be interpreted as, okay, cash is the problem. Cash is not the problem per se. It needs three pillars to work, actually. It needs to be available, it needs to be accessible, and it needs to be accepted. But we could say the same for many of the other payment systems or payment means. We see a decline in Europe. I think we were on the point of sale at 79% in 2016. We are still at 59% in Europe, with huge discrepancies between the northern part of Europe, which is fully digitalized or almost fully digitalized, and the southern part of Europe, who still depends a lot on cash. So indeed, we felt the need to reiterate our commitment in the Eurosystem to cash. There is even a Eurosystem 2030 cash strategy that reminds what it is to be a legal tender, to be widely accepted and widely accessible. So that's an interesting trend. I would say that we've seen in the last few years a strategy that I was calling the cash fading strategy, which was in everyone's mind, to coming back to a strategy which is a bit more moderate, which says, no, let's coexist, or let's make cash and other means of payments coexist. That's an evolution. You know that in Europe we are working very hard on our digital euro, so a retail means of payment, or retail CBDC means of payment. However, we confirm our commitment to cash. The CBDC retail is not here to replace, but to complement cash. That's a very strong commitment on our side.
Can I ask you a follow-up question there? Where did this need to sort of reiterate that commitment come from? Was it that you were seeing people sort of finding it difficult to pay in cash if they wanted to? Did this come from sort of the audience, sort of the customers who felt that, oh my God, my cash is going away?
There is one criteria that comes very often into the discussion of the digital euro, which is data privacy. And you know, in Europe, it's a very big topic. But I would add a second one, which is resiliency. Very early in the discussion of the digital euro, the people question, will that be as efficient as cash? After all, cash, it's very fast. It's immediate settlements. Payment experts will understand. It's settlement finality immediately. It's cheap. It doesn't cost a lot to issue banknotes. It's relatively secure. There is the counterfeiting measures of all the banknotes have proven to be very efficient against crime. So why would I switch to a digital means of payment which might be less resilient? So this was the initial discussion. However, we also complemented the digital euro strategy by reiterating that all those criteria will exist in the digital euro, but we needed to reiterate because the people were scared to lose the power over their cash. No, there will be offline measures in the digital euro, like your cash. So keep your cash. There is even more recently the legislator saying, no, you need to have cash. At least it was mentioned between 75 or 80 or 100 euro at home, just in case, something happened. You may have heard recently, one of our countries, Spain, went out of electricity for 12 hours. In other parts of the world, that's part of the daily routine. in Europe, we had never experienced an outage so long, and people realized that cash sometimes is good.
That's very, very interesting. Kenneth, can I come to you? Because again, in Singapore, financial literacy is high, digital penetration is high. Have you seen or felt a need to reiterate the fact that cash has to coexist? Has it come within your policy realm at all?
Yes, so in Singapore's case, what we've seen is that cash usage has actually dropped fairly significantly. 10 years ago, the ratio of cash withdrawals to digital payments volumes were actually around 60%. And in 10 years, actually, that has dropped to just around 7%. So actually, we in Singapore, we have already seen quite a significant, I would say, both growth in digital payments as well as a decline, right, in the use of cash. Jean has set out some considerations earlier of what effective, I would say, retail payments attributes there should be. I would add on top of that two more human dimensions that we need, when it comes to making payments. One is comfort, and the other, of course, is convenience, right? First, I start with convenience. The reason why I would say convenience is an important factor for users is that, we just want to be able to make a payment in many instances and just have it go through without having to open our wallet or think about finding cash, or when we travel to think about exchanging money, for example. And hence, the availability of effective digital payment mechanisms does cause the volumes to increase, which we have seen in Singapore. At the same time, many of our users still desire comfort, right? Comfort of having money that they can count, they can use for their budgeting purposes, they can use for financial education as well. Quite often we hear in Singapore that children, I think, benefit more when they actually have physical money to count and carry out their budgeting. So in Singapore, we currently don't have a legislation per se, right, to enforce the use of cash, but we do have a very strong stance by the Monetary Authority of Singapore, by the government, to say that we do strongly encourage that cash must be widely available. If you go to most of the stores in Singapore, while more than 90% of our stores actually accept some form of digital or QR payments, most also will continue to accept cash. And I think this speaks to this dual prong, I would say, approach of meeting both the convenience needs of users as well as the comfort of cash for certain groups as well.
And I'll come back to some of those points. But Fraser, let me come to the other end of the spectrum. I think you in Malawi, us in India, South Africa, we would probably still be on the curve where we need to get a lot more people into the digital realm. How do you balance the importance of cash while also pushing more people into digital payments?
Thank you very much. First of all, let me thank NPCI for inviting me to this important event to share our experience in Malawi. We see the coexistence of cash and digital payments both as a challenge as well as an opportunity for the innovators. Coming from a developing country where 70% of the population lives in the rural area, where a network is not readily available, the proportion of people that are connected to the grid, electricity is about, it's less than 30%, and also maybe literacy levels are not that high. So when we are pushing the agenda of digitizing payments, there are quite a number of factors that users take into account. For example, as he has already indicated, to a consumer, cash is costless. It doesn't involve use of user fees. And again, it's also already available. It's a medium of payment, and it has been used over a long period, so it has built trust. And then it is issued by the central bank, which also increases trust in the use of the cash as a payment instrument. So when you go to the flip side of it, when you look at the digital payments, there are user fees. Both the operator has to incur some costs, the user as well also has to pay, while cash, it's free from the user's side. So if any rational consumer will say, I better go for the cheapest payment instrument, The other thing is the issue of network. As I said, in Malawi, it's not all corners of the country that are covered. And again, the issue of digital literacy is also low. So as we are pushing cash from the Reserve Bank side, you also see that cash in circulation also increases. So you have two streams: the digital payments is increasing, and yet cash in circulation is also increasing. What normally happens is that, especially in the mobile money ecosystem, when you send money, it gets cashed out 100%. So it's like you are increasing this stream, and the cash in circulation is also increasing. What we're trying to push is maybe to increase the use cases, increase the merchant payments, bill payments, which we are really trying to impress upon people to adopt. But then the challenge is the cost. Yeah, so that's, I think, the major challenge that we're having in Malawi, in as far as the pushing adoption of digital payments is concerned.
What is the solution that is working best for you right now? Is it QR codes? Is it something else?
We are thinking of implementing a QR code. We haven't yet started a national QR code, but the various operators do have their QR codes. But we take this as maybe fragmented kind of approach, but we want one unified QR code which everybody can use, which is truly inclusive. And I was looking at the Indian solution, the UPI. I think this one is a truly inclusive app that we can think of adopting in Malawi.
Sheikhs, give us your experience in South Africa. I think, is 50% the number in terms of digital payment adoption across the population, or do I have that wrong? I'm just wondering where you're on that curve and what you see as a direction ahead.
So thank you firstly for inviting us to participate in the panel and to be able to contribute to our learnings from a South African experience. Our experience is probably a bit of a mix of everything here, because we are still very cash heavy. Approximately 8 out of 10 payments are in cash. Still very much on the cash heavy side, and that was one of the reasons that the South African Reserve Bank had tried to really drive digital adoption via the Vision 2025 program initiative, in which the PayShop instant payment system was developed, and the objective was to be able to reduce the usage of cash and to be trying to at least be able to get more South Africans into the adoption and the utilization of digital payments. In the recent State of Retail Payments report that the South African Reserve Bank had issued last year, we still find that cash intensity is still quite high. But there's also been a realization that we are not going to become a cashless society. So there's more of an acceptance of the concept of a smart cash society, in which the barriers between cash utilization and digital adoption has been minimized, or the less friction between interoperability between those two, and to try to be able to increase the adoption and so to some of those pillars that were mentioned earlier, as you said, comfort and so forth. I think necessity is also a key factor. And certainly in a South African context, given that we've got one of the largest Gini coefficients in the world, if not the largest Gini coefficient in the world, you've got people living in two ends of the spectrum. And we are trying, and certainly the policymakers and regulators are trying to really lessen that divide and to create a bridge between those that are cash-heavy users and those that are digital payments users. And certainly as a Pay Inc. level, that's one of our key objectives as well, is to be able to drive that financial inclusion.
What are the tools that have worked most for you in that sort of bridging that divide?
I beg your pardon?
What are the tools that are working for you in bridging that divide between the
So it helps having a progressive regulator, a regulator that's been excuse me, open to learning from their counterparts in other jurisdictions, and certainly the Indian experience has definitely been very informative in that regard. And as a result, our regulator has been changing and looking at how to be able to bring more non-traditional role players into the ecosystem, to be able to drive the use of greater participation by fintechs into the core national payment system. And as such, regulations are being revised as we speak. It's actually currently underway to be able to enable that greater participation. Piece of legislation like the National Payment System Act, as well as the Banks Act, all being revised and catering for your greater level of non-bank participation, because there's been a realization that your fintechs are closer to the ground, more agile, able to address the needs of your end users and your consumers. And as such, they will also be able to drive that adoption of digital infrastructure and digital tools. So that's definitely been one of the tools in that space, is that it helps to have a regulator that's keen to be and open to be able to listen and to be able to participate and co-create with the industry.
Actually, that's an interesting segue into my next set of questions. And Kenneth, there are, in different countries, there will be different parts of the population which have some resistance to coming out of the cash ecosystem and moving into digital. It could be, in some cases, women, in other cases, lower income population. It could be migrant workers who perhaps, want to retain some amount of their earnings in cash. Are there any specific solutions that you have used targeted to one set of very heavy cash users, for instance, which you think have worked, which could have broader learnings?
So I can think of two broad measures, I think, that we have found to be helpful for cash-dependent users. One, of course, is to increase the availability of cash using existing channels where possible. In the case of Singapore, and I think in other countries as well, there are touch points or places where cash-dependent users frequent and actually can withdraw cash from if the right tools are made available to them. So I'm speaking of places like convenience stores, sometimes post offices as well. And what Singapore has done is that to complement our existing ATM network, we've actually installed cash withdrawal points, set up cash withdrawal points, convenience stores and other locations, so that the cash-dependent users can actually go there as part of their day-to-day commute without having to walk too far, as part of their daily routine in order to withdraw cash. And we found that to be helpful. The second set of interventions are really what I would call last mile or stakeholder engagement mechanisms, where we have engagement partners or basically to engage these cash-dependent groups. So in Singapore, we have two such groups, and our initiatives are both called so-called Go Digital. So our first is to introduce a scheme called Seniors Go Digital, where we actually have ambassadors to engage our senior citizens to educate them on digital payment mechanisms, how it can actually make their daily processes smoother. And a second initiative we rolled out is what we call Hawkers Go Digital. So hawkers refer to the food vendors, right? The casual food vendors in our countries who historically accept cash, and what this required on our end was actually ambassadors again to visit these stalls one by one to show them what are the benefits of accepting QR payments. This has enabled, for both cases, the usage of digital payments to increase.
That's very interesting. Jean, you talked about the very different sort of, levels of cash usage in different countries in Europe. In the countries where it's still relatively higher than others, is there still an attempt to move people away from cash, or is it sort of, that's the way we like it and we're going to keep it that way?
No, there are still some incentive to use the digital means of payments, but we have to remember that everywhere in Europe it's a legal tender, so basically it must be accepted in every shop, in every commercial establishment. So that's the regulation part. And we are very strong in Europe on regulation. We love our regulation, so it's legal tender everywhere in Europe. Of course, there are incentives to use more digital means of payments. Fraser, you mentioned before the digital literacy is one of the barriers to the adoption of digital payment, but digital literacy for me implies digital familiarity. I know few members of my family that still have problems using a smartphone. So before using a digital means of payments, it will take some time, and we need to support all of these people to access cash. I just piggyback on the Kenneth's point. So, for example, how do we make cash accessible in rural area where there is no bank? The branches, the filials have disappeared. Shops are playing, so the little shops are providing cash now to user. It's established in every, I would say, supermarket in Germany. You can withdraw cash. It's spreading actually even in France, in other countries. That's a new trend. With the disappearance of ATM and branches, we see that trend coming up.
That's very interesting. Fraser, to you, sort of in some of the areas or in some of the use cases that you have tried to transition people away from cash, what is the pushback that you have received and how have you tried to sort of address it? In India, for instance, there was a lot of move towards assisted payments in some of the rural areas that, post offices, for instance, people who have inroads into the deepest parts of India, those people would go teach someone how to use, as you said, a digital, payment option. Have you attempted any such measures that would be interesting?
Not really, but what we have done is we have opened up the payment space, which previously was exclusive to banks and mobile money operators. These are telco-based operators, but now anybody, an independent e-money issuer, can come on board and then we register him. We normally encourage the ones that are bringing in open source solutions so that we do not create silos. And these are the ones that can easily go into rural areas and interact with people, unlike banks where they sit in the comfort of their offices and they don't know what the customer out there needs. So we have registered quite a number of fintechs in the payments area who have gone into the rural areas and to sign up quite a number of users. And just also to ensure that as we are pushing for digital payments to gain ground and also reduce cash, we are reviewing our regulatory framework. We have the e-money regulation. So what we have done is we have increased the limit on which one can hold on his wallet, but reduce the amount that can be cashed out. As I said, what we saw is that 100% that was pushed in the digital rail got cashed out. So what we have done is increase the holding limit so that we retain the bulk of the e-value within the ecosystem, while the cash out bit is reduced.
Was there pushback against that? Because someone could say that's my money, whether I want to keep it in digital or cash. Well, I'm curious to know whether there was pushback.
Yeah, from the customers, not really. But it's surprising that some of the operators are not comfortable with that. But I know maybe it could be the issue of commissions, because when you do a cash out, the operators do pay agents the commission. So mainly the agents are the ones that were complaining. But the customers, they said, no, I think we are also benefiting from this because we are reducing our cash holdings and then moving to the digital space.
That's interesting. Sorry, Shakes, you wanted to jump in. I was just, that reminded me of something that we've in India a couple of times thought about and always pulled back from, which is a tax on cash withdrawals beyond a certain amount. Every time that has even come into the domain of, sort of thinking, there's been significant pushback to sort of the disincentivizing of cash rather than the incentivizing of, sort of digital payments. I'll move to a sort of another line of thinking, and Shakes, I can start with you. Are there, you're here in Mumbai, at a Fintech fest with thousands of people and lots of different solutions. Is there anything in the India digital stack that is particularly interesting to you that you think can find use in South Africa? On the other hand, is there anything in your stack which you think, as you sort of overlook the landscape here, is something that could help strengthen the India payment ecosystem?
So the answer is yes, definitely, on both sides.
Both sides, lovely. So I'd love to hear both.
When you look at the way that the South African model has been developed, and certainly a lot of the influence from the India stack was factored into the South Africa equation, and just in terms of the way that our policymakers are now looking at focusing on digital infrastructure and establishment of and utilization of digital public infrastructure. So from a perspective of the initiative that the South African Reserve Bank is busy working on right now, called the Payments Ecosystem Modernization Initiative, in which they're looking to establish and implement a national payments utility, which is essentially a national payments infrastructure. There is also a focus on a digital financial ID element within that concept and within that model. And if you have to look at it and to actually take that up a notch in terms of a program called Operation Vulindlela, which is a program that has been driven out of our office of our presidency, it's an imperative to be able to refresh and renew and upgrade infrastructure in the country. And there's a realization that in order to be able to achieve the objectives of economic growth, of financial inclusion, of being able to bring more people into the fold, there has to be a focus on addressing infrastructure shortcomings. And certainly what India has achieved in its last 10 odd years, certainly maybe a bit longer, has been around establishment of its own digital public infrastructure with Aadhaar and so forth. I mean, so all of these are things that we've definitely factored in and that are being considered. I think from our perspective, one of the things that, something that our regulator is trying to do, which has been a little bit different from the Indian experience, has been the attempts to address the regulation and to be able to allow for greater non-bank participation and for direct participation. In other words, for your fintechs to be able to be licensed and not to be sponsored into the ecosystem. So that's something that is still underway. Time will tell how successful that initiative is going to be, whether that's actually going to be able to allow for greater adoption. I know that in the Indian model, your fintechs still have to work with the banks. But of course, the fintechs have been a real catalyst in being able to drive the adoption of UPI. In the South African context, they've been a little different in actually licensing your non-banks to be able to participate directly as well, and for them not to necessarily have a bank. Of course, all of the regulations, they still have to adhere to all those things. You can't throw away all of the risk controls and those kinds of considerations. So it's still in flux, it's still in play. I think in the next couple of years, we'll see how successful that's been.
That's very interesting because we are quite protective about our banks over here, so it's always banks first. Kenneth, to you as well, I know that India and Singapore have tried the linkage of the Pay Now UPI systems. I'd love to hear from your perspective how you think that's going and whether there are other elements of linkages that you can see between the digital payment infrastructure stacks of the two countries.
Yes, so we found the linkage between Singapore's Pay Now and UPI to be very encouraging and very instructive. We've seen growth in the usage of this cross-border linkage since it started, and we are working very closely with our partners, NIPL, to explore how we can further boost, the usage of this platform. And it also gives us, I think, a good insight into the India stack and what else we can learn from them in terms of the innovations that NIPL and NPCI have put in place for the domestic ecosystem, the Indian ecosystem. Another area that we are working together with India on is a multilateral solution called Project Nexus that aims to link the real-time instant payment systems of not only India and Singapore, but other countries as well. For now, primarily in the Southeast Asian region, but we do have interest from other countries as well.
That's very interesting. And eventually, do you think once the CBDC projects get far along enough, there would be sort of collaboration in that space as well between Singapore and India as well?
Yeah, so Singapore also has digital asset, I would say, collaborations with the Reserve Bank of India, and we're definitely keen to further explore on that front what are the use cases that can be done.
Jean, a similar question to you, and what's interesting in the India stack for you that you think you could take back home to one of your countries? And again, what can we bring from your countries into India?
Let's learn from India first. So
It should be like two-way.
now, if you look at the immense success of UPI, and you start asking why is it a success? It's easy, yes, but it's not sufficient. So fantastic user experience for the integrator as well, but it's not sufficient. It's everywhere. Its ubiquity is amazing. You go on the street and you see people with a few items, they accept UPI. But that's not sufficient. For me, the success of UPI is that it is trustworthy. So in every transaction, you place your trust because you have trust in the ecosystem, you have trust on the provider, on the integrator. And why do you have trust? Because end-to-end, you guarantee the identity of the issuer and the recipient. So that was, for me, the smartest, if not the only way to start the journey, which is with the digital identity. Aadhaar is the greatest success factor for me of the adoption, or such an immense adoption of the UPI's ecosystem. So we have to learn from that. There are also some initiatives in Europe on digital identity. It takes always time because we have to agree among 20 people around the table. But that's, for me, that's one of the greatest success factors that we need to learn from. What we bring, on the other hand, we say we love regulation, so we have a good experience in regulation on what works and what works less. So regulation comes always with the carrot and the stick. You shall not put the stick before the carrots, but you need both hands.
Can I ask, I think there is an linkage between UPI and some of
course,
Eurozone payment systems that's underway as well.
We want to replicate that success. That's why we are also exploring the possibility to interlink our instant payment platform in Europe, TIPS, with UPI.
Okay, that's good to hear. Fraser, to you, and what you think you can take away from here and what we can take away from you.
Yeah, I think in terms of ranking, number one would be UPI. Because it is truly inclusive. I call it everyone, everywhere. In the streets, you find somebody with a QR code selling vegetables, and you can transact easily. And it's also fast, and it's affordable. Remember the challenge that I talked about back home, it's cost.
Yes.
Which is pushing people out of the digital space. Yeah. But UPI is affordable. So if we can have a solution like that one, which can ride on the infrastructure that we already have, I think that would be a plus. Second will be the Aadhaar, which could be linked to the payments platform for ease identification. We have embarked on an eKYC initiative. We want to set up a centralized eKYC platform, and the learning from the Aadhaar experience will be a very good advantage for us. Thank you.
I have one last question, and this is open to everybody because this is something that India is sort of going to embark on shortly. I think there's a lot of anticipation that we will allow biometrics to be the second factor of authentication in UPI payments. It's interesting, but also potentially will have different views. I'm curious to know whether any of you in your geographies would be comfortable with that, think it's an interesting innovation, think it's an innovation that needs strong regulations around it. I'd love to get views because I think we're moving in that direction right now. Shakes, you want to go for it first?
So, look, I think that if you're building from a biometrics perspective, from a confirmation and verification perspective, it makes absolute sense, right? I mean, I'm as unique as can be. So you'd obviously need to ensure that the model is built carefully enough to be able to withstand scrutiny from a protection of personal information perspective. Certainly in the South African context, we've got a privacy law called the Protection of Personal Information Act. So it would have to be able to withstand that level of regulatory scrutiny. But from a functional perspective, I think that it makes sense as long as you're able to ensure that data pertaining to that unique individual and that biometric data is well protected, and that you've got all the appropriate cyber resilience and cybersecurity around it to make sure that it can't be breached and hacked.
Kenneth? Any thoughts?
Yeah, so in Singapore's case, actually, we do already employ biometrics for authentication purposes. And how we do so is that we do have a national digital identity infrastructure, which we call SingPass. And what SingPass does is that it provides different options or modalities for a person to authenticate himself. So for a lower risk type of transaction, we can actually use our app, a digital identity app on our phone to scan a QR code, right, in order to authenticate that transaction. So for normal payment, that would suffice. But for higher risk transaction, for example, recently I helped my daughter to open her first bank account. And in Singapore, we do it digitally. And to do so, actually, in addition to scanning an app, it actually requires a biometric facial scan, which is carried out over a camera. The camera will essentially, or rather your screen will be flashing different colors and capturing different aspects of your face in order to authenticate who you are as a person. And this is actually built into our national digital identity infrastructure, which is helpful for higher risk types of use cases that involve a higher degree of authentication.
All right, that's, I did not know that. That's great to know. Would regulation come in the way of using something like that in your geographies?
Of course, as usual. No. We activated actually the second factor of authentication a few years back with the regulation called PSD2 in Europe. So it's in the air for quite some time now. However, using biometrics immediately, the discussion goes into the direction of data privacy, GDPR in Europe. So it's up to the payment service provider to ensure that the biometrics are used in a proper way. But yes, that's the stick and the carrot, or the right balance between the usability and the regulation.
Fraser, last word to you. Would you go in that direction or would you stay away?
I think that's an area that we are looking at under the eKYC platform, because right now we're just using the biometric, the fingerprint, and also the two-factor authentication, where maybe one gets an OTP to authorize a transaction. But that's the direction that we need to take.
On that note, I think we'll close off the panel. I'm not sure we have a provision for audience questions. We don't, and we may not have time, but I'm sure we'll be able to sort of say hello on the sidelines. Thank you all so much. This is very interesting. I'd love to see what the conversation looks like 5 years from now, and whether we are talking about keeping cash relevant or sort of, still pushing digital payments into cash-dependent populations. But thank you all for coming in. Appreciate your time.
Thank you so much. And may I request all our eminent panelists to please step forward, allow us an opportunity to get them all together as a group. And ladies and gentlemen, may I request all of you, if you've learned something new from them, let's give them a big and a mighty round of applause in appreciating all our panelists for joining us. Ladies and gentlemen, this is all happening at the day one of the Global Fintech Fest 2025. And once again, a big thank you to all our eminent panelists for joining us.